Bhardwaj, who's senior economist, Kotak Mahindra Bank, joins in to answer some of those questions on the way ahead. Upasna, it's great to have you on the show. Good morning. Thanks very much for taking out the time. Now, the PMO is starting two schemes. First one is a scheme based on the UNISA model, promising input support of 10,000 to each landholder and landless farmer. And the second scheme is based on the Telangana model, promising 4,000 rupees per acre to small marginalized farmers. What will be the impact of such schemes for the government?
Well, I think, it depends on the scale and what exactly is going to be the model of, the waiver that is going to be followed. So, there are estimates which are ranging from anywhere between 25,000 crore to 2 lakh crore, 3 lakh crore. And that obviously is going to be a function of how exactly is going to be the coverage of that waiver package that is going to be announced. One important part of this is, of course, that this is not going to be all of that financial impact is not going to be expected within this financial year, of course, because this is going to be a staggered over the next few quarters, that impact, and hence we have to see firstly the coverage, and secondly what is exactly the nature, because if it is going to be linked, the package is going to be linked to certain conditions, then clearly the financial impact will be much more limited, at least in the near term.
Do you think if this kind of a move actually goes through, this in the short term is just going to get everyone wondering that how will government manage this kind of an exercise? What will happen to fiscal deficit? Will they have to borrow more? Can they really afford to do that when we all know that they will miss on the fiscal deficit target?
Yes, actually, if you look at the fiscal deficit until November, it's already at 115% of the budgeted targets. Clearly here there are two parts to it. While if you look at the expenditure as of now as a percentage of budgeted numbers, it's still on track. But it is more the gap from the revenue collections that is a worrying trend as of now. We know that right now the GST tax collection monthly run rate is close to 90,000 crore, and what is the required run rate in the next 3 months collection is actually close to 1.5 lakh crore. Now, if you look at this gap, that in itself suggests that for the center itself, the gap is around 75,000 to 80,000 crore coming from just GST collections. We're not even talking about any slippage from the divestment side or any other revenue source. So that is one thing. Apart from that, of course, we are talking about this kind of a loan waiver or any kind of a relief package for the rural sector, which obviously in the absence of revenue collections, it just increases the threat of fiscal slippage, of course. Yes, there are going to be probably combinations of how to manage the fiscal deficit. One is the expenditure switch that we're talking about. Expenditure switch could happen because we could see a shift away from various other resources or any other form of spending towards the rural distress package that we're talking about. If you look at until November, the expenditure, capital expenditure balance that is left for expenditure from December to March is around 1.1 lakh crore. So there is some kind of a leeway to roll over that expenditure into the next year. And within revenue expenditure, we might see some other subsidy being cut down, and that in turn could be resulting in a switch towards any other rural distress package that is going to be announced. So it is going to be a mix of all, and yet despite all this, it looks like there is a risk to a fiscal slippage. But of course, if there is going to be an excessive, aggressive rollover of expenditure, then that's probably one of the ways in which they can still meet the fiscal deficit target. But as of now, yes, there remains a very high probability of a fiscal slippage.
Seems to be the case. Upasna, given that the 10-year yield has already spiked to a 3-week high, where do you see the yield moving from here?
Well, I think here again, it's a function of how exactly the fiscal announcements are going to be in the coming weeks. Again, like I mentioned earlier, I think it's a function of how exactly is going to be the coverage of the package that is expected to be announced. As of now, markets are hearing anywhere ranging from a very low number to up to 3 lakh crore. So I think if the announcement is going to have a financial impact which is somewhere close to 50,000 crore, 1 lakh crore, I think there could be a little bit of relief to the markets, but that still doesn't take away the fact that there will still remain a risk of a fiscal slippage. So I believe that right now we are in that range wherein markets are pricing in a little bit of slippage. But exactly the magnitude of that is yet to hit it. So I guess we are still not ruling out a 770 kind of levels. But depending on the package, there could be a minor relief rally if the financial impact is much lower.
So if one looks at the indirect impact of this entire move, and as of now we are speculating, we don't have a final print, whether it's Orissa model or the Telangana model, but something for farmers is coming. Will that bring inflation back?
Yes, over the course of the next year, we could see this translate into higher inflation. Somewhere the idea is to relieve the rural stress, and I think at some point we will start seeing a mean reversion of the food disinflation that we are seeing. And all in all, yes, that will result in some kind of inflationary pressures building up. But again, all in all, if we look at how the growth is expected to pan out in the next few quarters, that too is not very promising. And if that is the case, then probably the core inflation could be slightly subdued. So while the food inflation could be moving up, the core inflation could be slightly subdued, which in turn could result in a balancing of food overall headline inflation trajectory. So we still are looking at a possibility of a range of 4.5% or so towards March 2019. But again, depending on the scale of the package, we may have to relook at the inflation expectations.
How much of a slippage is okay? Even in terms of signaling, because some of the economists say that, look, if 3.3 goes to 3.5, it's not that big a miss.
Well, see, at this point in time, I believe that last year the fiscal deficit that was delivered was 3.5%. So I would like to say that up to 3.5%, it is probably going to be taken as okay. But any number beyond that, of course, will be taken significantly negative. Even for 3.5, I would like to point out that if instead of a 3.3, the fiscal deficit is 3.5, it is possible that we do not really see excess market borrowing, because the small saving collections as of now looks to be fairly robust, and that may result in financing of the excess fiscal deficit that may happen. But beyond 3.5%, it may become significantly negative.
Great to have you on the show. Thank you so much for taking the time out and speaking with us today.